Well, gentlemen, ladies and gentlemen, my whiplash is not getting any better. Whips, whipsaw markets, late day rally yesterday, giving it all back and then some. S&Ps are down. We got a lot to talk about here on this Thursday pre-market prep ahead of the jobs number. We'll cover some earnings. We'll look at some positive stuff, and it's not in the United States. Jim Tassoni, he'll join us at 8:35. Jim is navigating these markets pretty carefully, so we'll get his take. We got a lot to cover, folks. It's pre-market prep on a Thursday. Well, that was the wrong thing. Let's run this one.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Where's the breadster when you need them? Down 65 and a half handles, 57.86.50. IWM, that's down 248. Buck trying to find a bottom here, touching 104, down 18 cents, 104.07. TLT giving things back from its recent move. That's down 39 cents at 90.31. USO green after bad 3 days. That's up 30 cents at 71.72. GLD getting back near those old-time highs, but down today a buck 53 at 268.09. SLV, oh, Dennis doesn't want to talk about it. Bitcoin futures, they're down $660, 90,275. Well, gentlemen, what a different picture from where we were at the 4 o'clock close, and here we are, right back down.
It's the same thing every single day. I'm going to go show you my Twitter account here. I'm going to take over presenting here for a second.
Take over, Dennis.
And I want to show you the playbook here. I should have had this more ready, so I suck because I don't have this ready. Christian, how are you while I get this tweet ready here?
Good morning. Good morning. Yes, absolutely. Whipsaw, we've moved the last 5 days. The S&P has moved at least 1%. That's a lot. I remember some time long ago, people were like, hey, we haven't had a 1% move in the S&P, or, now it's become a normal thing every day for the last 5 days, plus or minus 1%. And we're already moving around that this morning.
Okay, now I just messed everything up. But I was trying to show this tweet here, which you can kind of see. I can't really blow it up, but here is the playbook, my playbook. Trump, dump, buy the dip. Trump, pump, sell the rip. Trump, dump, buy the dip. Trump, pump, sell the rip. Trump, dump, buy the dip. Trump, pump, sell the rip. Do you sense a pattern? We're up 100, we're down 100. We're up 100, we're down 100. We're up 100, we're down 100. The fade trade is the play. That continues to be what you need to do until further notice. I mean, maybe at a certain point in time, we're going to start trending down or trending higher. We are trending down overall, but look at how many, Joel, show this on charts in the S&P. How many 100-point sell-offs and 100-point spikes do we have in the last 10 days? There's got to be a half dozen or more, maybe even 10. It might be 10 like each day. And again, we're not showing the screen here. We're really stuck without the Brentster here. Here we go.
Okay,
I'm showing the screen for you here. Now, Joel, you're good on your charts. We just had the wrong layout here. Now I don't see your charts.
Okay, hold on.
Holy mackerel. I'm telling you, without the Brentster, we just realized we need you, Brent. Come back quickly. Just look at the last 10 days of charts. So I guess the best chart may be the top right one if you blow it up more. But
well, do you want to do, this is a 30-minute. So
yeah, well, you could do that too. But I'm just going to look at my own charts here. February 21st, we sold off 100 S&P points. We followed through. Really, the next couple of days sold off another 100. Then we bounced 100. Then we sold off 150. Then we bounced 100. Then we sold off 100. Then we bounced 100. Then we sold off 200. Then we bounced 100 yesterday. So I don't know how many that is. But now overnight, we are basically selling off 70. So we'll probably sell off 100 because that's what the number seems to be. I mean, the oscillations here are nothing short of incredible. I don't think I've ever seen this many whipsaw trading actions. And you know what? Probably going to be some type of, tweet or, I guess it's not a tweet when he's on social media, but I say, oh, yeah, I was talking to Justin and, made some progress. Or we're talking to Chi and, yeah, we had a good conversation. The market will just rally and the algos will just rip it all higher here again. I mean, it's all over the place here. All over the place. But I want to give Christian Fromhertz some props here because he's been talking about the international trade. And with so much uncertainty in the U.S., and I mean, there's all kinds of uncertainty. We don't know what Trump is going to do next. Look at the international stocks. Christian's been all over this European trade. EFA breaking out to new highs here once again. FXI continues breaking out to new highs here once again. Emerging markets coming back strong. I mean, the money is clearly coming out of U.S. stocks overall and moving international. There is a flow of money, and that's the only way, you see U.S. stocks going down and you see international stocks like, Europe, EFA is a great gauge, FXI going up. You can clearly see investors are uncertain of what is going on in the U.S. They're more comfortable investing internationally right now. And that is what we are clearly seeing. This move to international is working. Make Europe great again. I mean, it's definitely working. We talk about make America great again. There's going to be a lot of short-term hiccups with what Trump's trying to do, but definitely working over in Europe right now. Europe's having a great year.
It's quite different so far this year. And thank you for the compliments. I mean, this has been a crazy trading year so far, and trying to basically just be objective and kind of look for some of these things that are outperforming. When we look at, let's see if I can get the data for you here, but the S&P right now is slightly red for the year. I see down about 0.6 percentage point year to date. European stocks, and this is like in local, are up 12% year to date. The DAX is up 16% year to date. The Hang Seng is up 21% year to date. So if you've had some exposure, and I'm not saying that you want to go necessarily all in on these areas, but there's some trades, and I missed that move in the initial move in BABA, but I've gotten into it, and it was doing a nice consolidation in Alibaba. I thought we talked about SE yesterday, which is a Singapore stock. It had good earnings. We're going to talk about, do we want to talk about JD.com here?
Yeah, why don't we do that?
I thought it was a good chart yesterday, and I put on a bit of an earnings trade yesterday because it's
What'd you put on?
Call spread. I put on I put on just a weekly 44.47 call spread. So paid $1, basically $1 for that trade. So again, just not a huge wide spread, spread just $3 wide, looking to make $2, risking $1.
So JD reports a buck versus 76 cents last year. Oh no, $1.02 versus 90 is your current. 47.54 versus 45.96. So beat on the top, beat on the bottom. International stocks are doing well. International stocks are good ones to have call spreads on and earnings. The other ones probably the opposite. If they're U.S., they're just not good, even when they beat. Wow. So great call, Christian. Stock is popping. $3 here in the pre-market. Again, obviously trading overseas as well. So it's tight market here too, up 6.67%.
And they're going to pay a dividend, or they increased the annual cash dividend. I didn't even know they paid a dividend, but going with the trend of the overseas markets here. I'll just alert our traders, investors that we have traded higher in the pre-market session. We did trade over $48 to $48.43. Next, you go to your monthlies, the bottom right chart, and you have a high at 47.82. So let's just make it easy. If you're looking for more on this move, you're looking for that blast to 50. Well, you got to get through 48 first, and that's going to be a big level. It's still $2 away, but that's a nice move here. This is the highest this stock has been since April of 23. So really fitting the trend here.
Talk about taking this trade off, Christian. So you put this on for $1, max is 2. Do you try to work out of it today to get like $1.50 out of it, like to try to get most of it out? Or do you let it ride and say, well, I think this could go over 47, I'm going to grab the whole thing?
I, like anything, when it's something's moving in my direction, I usually try to take a target. I'll try to take a target at we'll see. I'll probably be shy of $2. And then I'll try to hold the last piece. It is a weekly call spread, but I'll try to get, and I don't think it's going to go way, has a chance to go way above my strike. So the upward strike. So I'll try to get if it continues to work in my favor, like 270 or something like that. But I don't try to risk like the last,
it's
30.
so hard in those things because I've played them over the years, and you're thinking, man, give me my $2.
Yeah.
Like, let's say this goes to 47.10 or 47.30.
Yeah,
You're like,
hard.
show me the money. And you're like, wow, well, this thing's trading at $1.75. No, it's traded over 47.
Yeah,
Give
its
me my
intrinsic
money.
value is too. Yeah, it's going to be
Isn't
there at
that
the end, but
aggravating?
it still has. It still has the optionality of it. Do you try to lag one
The-
side, Christian, or do you do both the same?
Well, I was just going to say that the time sometimes works against you, especially if you put on one of these call spreads and it's like a Tuesday or Wednesday, and you're way in the money. To Joel's point, yeah, they're not going to give you that because there's a chance that it could go below your, it could sell off before expiration. So I only have one day. Well, today's trading day and tomorrow, so it should help me a little bit more. But yeah, they're not going to give you that full intrinsic value until expiration. Do I try to leg out of it? No, not really. Not in this sense. No, I usually keep the spread. Like every once in a while, I will do some type of you can't really do stock hedging with a spread. You should definitely if I always see people do this on Twitter where they own calls in something and a name reports earnings and the stock is way up pre-market and they're doing their victory lap pre-market and then they don't delta hedge, and that's something that you should be doing if you're outright long calls or puts. Yeah, and you should be selling stock versus your calls. And some people are doing these big victory laps pre-market. I'm like, well, I hope you're selling stock right now to lock it in, because a lot of times what could happen is sellers do come in once we get to the open, and those profits evaporate quite frequently.
Okay. Let's do you want a good earnings report or do you want a bad earnings report?
Let's go the bad first.
Do you want well, they're both equally bad here. Let's they're down. Dennis is like, well, we've got to have a stock down 20%. Well, we have two down nearly 20%. And I'll go with MongoDB here. They reported after the close yesterday. They beat $1.28 versus 66. Well, that looks pretty good. They beat on sales 548 versus 519. Wow, that looks pretty good. The guidance 63 to 67 versus 62. I guess what they don't like here is the revenue guidance here, but that's kind of in the middle. Christian, what is wrong with the MongoDB report?
Let's see. This is a name, first of all, that really moves on earnings. This is a name that's impossible to play. So what did they do wrong here? I didn't read that much into the report, but I know the stock really moves. The Sync says outlook raises growth concerns is what I read. And of course, it's when you have a move like this, it's also dragging down names like Snowflake, Datadog, Cloudflare are also down in sympathy.
I see it here. It's the fiscal year 26 Oh, that I see it now. Just got to keep reading the fine print. Fiscal year 26, 244 versus to 262 versus 334. That's a wallop. And then the revenue guide 224 to 228 versus 232. So it's that. All right, now I see why it's getting upset. Now why it's getting killed. That is a big haircut for the EPS. Trading. I went to Snow. I'll try and. I mean, what we've seen here with these stocks that come out with these bad reports and then they go lower. There's really hasn't been a lot of. You're at the bottom of the page here, in the bottom of the page. This is not investment advice. You had a low on August 5th of 212.74. Pre-market low comes in at 214. No, a little bit lower than that. Where's that pre-market low? Pre-market low. Oh, look at that. Confluence 212.55. Folks, it's probably a pure coincidence, but it does coincide with your August low.
I'm
Any
back.
thoughts on MDB, Triple D?
Well, we've seen this. So there's this argument. I want to make this argument that it's been a tough earnings season. Okta exception for sure, because it's one of been the few gap and goes. But we haven't seen a lot of gap and goes on earnings. And secondly, is the stocks that are missing, the stocks that are lower in guidance, typically aren't bouncing back as easily. So it's a tough sled for holding stocks through earnings here this earnings season. So if you're a trader, I would say it's very difficult to hold stocks through earnings. If you're an investor, long term, you have to hold stocks through earnings. So it's tricky. You're doing a balancing act here. But I tell you, this earnings season has been absolutely vicious for some stocks, where you're seeing stocks give back gains so quickly. Like years of gains. And, I don't know if you covered Marvell when I was gone, but we could cover it now.
We will. We'll go to Marvell.
Yeah, so Marvell reports, and the report actually isn't even that bad. It's like, oh my gosh, it's down 18%. They must have just, they must just be a disaster of all disasters. Well, I tell you, they beat 60 cents versus 59, 1.81 billion versus 1.79 billion. And the guidance they're seeing on the full year revenue, 1.78 to 1.96, analyst estimates are 1.87. So they basically went right in line. So they beat and inline guidance. Boom, lose 18% of your wealth of your wealth really overnight here on the stock. And the stock was beat up going into the report too, because we go back a month ago, stock was near highs on 126 bucks. So just like that, bang bang, and it's down 40%. I mean, this is a vicious market here. Vicious.
Yeah, I agree. Like the numbers, we were looking at this report like after hours yesterday, and I had a couple questions about Marvell, and we were looking at the numbers. We're like, they're not that, they're not like, wow, they missed it. So that's a great point. I'm just going to say it again. I've talked a little bit about this, but I think the AI trade is becoming unwound, and they're not even like this. This is a big move for Marvell, and on a report that wasn't that bad. I just think the AI trade is coming undone. I think it's still overcrowded. You still have people. I was listening to. I don't want to comment. I don't want to talk about like different analysts and so forth, but I still see a lot of analysts that are trying to like pump up AI. And I just think that this is coming undone. There was also a note out from about Baba that they're coming out with cheaper AI to rival DeepSeek. That was a story out that was this morning. So I think that they're coming out with alternatives to very expensiveness. I would continue to watch Nvidia, and I think that the rallies aren't going up as much as the stock is going down. So I think that's a very big concern for the market. And I'll leave this question to you guys too. If that trade is, which I think is coming undone, the AI trade in the US, and because tech stocks have been acting so poor, what is the new theme going to be? And that's what I don't want to say keeps me up at night, but I don't know what the new theme is going to be for the US stock market.
Well, the new theme, we got it right, is international. That is the overall new theme, because like Trump or don't like Trump, vote for him or you didn't vote him, the one thing he has created is wicked uncertainty. And the market hates uncertainty. So you have investors who have been being in the US for the last 10 years because it has been the best place to be. I know Trump's all about make America great again. The US stock market has never been greater. The US stock market has been unbelievable. It has been the place to be. There is actually the opposite effect occurring here in the last month, is that he is making the US stock market not great again. And that is a problem for investors overall because they are heavily US centric. Even international investors have been heavily invested in the US for quite a long time. There is definitely a changing of the guard here happening here right now. I mean, we don't know what's going to happen next, and you've started a tariff war with the world. So clearly, what we started with when we said 20 minutes ago, but clearly, money is flowing out of the US and into international markets. We can clearly see that in the tape. You know, obviously not Canada. Canada's going to be in a world of pain here with this tariff war. But, you know, Mexico, same thing. That is not the place to be either. But FXI, emerging markets are looking good. Like you said, Europe's looking great. I mean, you can clearly see that this trade of being just focused in the US because it's the best place to be is coming unwound right now. So not only is the AI trade coming undone here, the US centric trade is coming undone here as well. So, you know, that's the issue. Is there places to be in the US? Absolutely. If we want to go to sectors, you've talked about them too, Christian. He's been all over this. The staples been doing very well here. The value trade. Berkshire Hathaway recently sold off, but been doing pretty well overall. So it's markets playing defense within the US and offense outside the US. That's what the money flows are showing us.
I mean, you could call it mega, make international great again.
Mega, make international great again. It's working.
Or you could call it mega instead of MAGA, make Europe great again. So that's what we're seeing. That's what
I got a joke for you too. You just reminded me of a joke. My boy was home yesterday and he's like telling me jokes. He has the flu. Everybody's got the flu up here. Flu, snow. It's just been the last 4 months of my life. He's like, okay, got a joke for you, Dad. When you go into the bathroom, you're Russian. When you come out of the bathroom, you're Canadian, because I'm Canadian. What are you when you're in the bathroom? I'm like, I don't know.
This is a dad joke.
He says, European.
Oh, I know that one. I should have.
There you go. So maybe he was paying attention to the markets here, because this market is turning European here too. The European markets are hot.
That's an old one. That's an old one, man. That is so. Tell Spencer that is a great one. Okay.
Yes, good. Yeah, that's good.
Let's go back to the earnings parade and let's go good earnings. We've done a couple bad ones.
Sure.
Let's go good. Let's go Zscaler, a stock that did have some former glory. They reported the street is liking what they see. 78 versus 69, slight beat on sales, but we all know it's about the guidance. The guidance is in range. Actually, the guidance is not. The upper end of the guidance is where the estimates were, but they like the EPS. So they're looking for a stock to buy. That's Zscaler. That's trading up 683 in the pre-market.
Okta went. So, maybe it's a cybersecurity thing, not CrowdStrike, but maybe some of these beat up cybersecurity stocks. And Okta was very beat up, and Zscaler has been pretty beat up too when we really look at it here. I mean, the all-time highs back at 373. You got $200, so it hasn't been doing great here. Maybe there's a little catch-up trade in these beaten down cybersecurity names. Christian, what do you think?
I'm just astounded at the names that are, and Okta, it seems like it's the outlier, did very well, but just looking at the up moves versus the down moves, and what is Zscaler up? It's like up about like 3.5% or something, and
3.48.
Yeah, you're just not getting like the big up moves right now. in terms of what's going on, when names miss, or, we just talked about Marvell. I still can't believe like the stock is down that much. So in relation to the ups versus the downs are moving in much more big magnitude.
Oh, back to the Marvell, and I don't know if it's going to get there today, but price has memory. Look at this $70 area, Dennis, if you're looking to add to that loser.
Not.
Look at all that, not only support, but you even kind of had resistance there. That was a long, almost a month and a half of consolidation there at 70 before you had the bump up. So that's going to Marvell. I just want to just real quick give some credit to our guests. And the first guest, I won't mention because everyone gets upset, but Gordon Johnson did talk about the unwinding of the AI trade and the weakness in NVIDIA and things. I know he's been saying that for a while, but that was a little over a week ago. We did have Ryan Craver on Monday talking about the retail, talking about Burlington and TJX. Burlington.
And he didn't like Abercrombie and Fitch, and Abercrombie and Fitch went down on the earnings. So
Did you see
Ryan there as
that?
well. Yeah,
Oh.
Ryan made good calls on the show. Didn't like Abercrombie and Fitch, but did like the discount off-price retailers like Burlington, and Burlington's ripping. So great call, Ryan.
Do you know why? Do you know why he has that kind of foresight? It's because of what he does with Commerce Canal. Like
he's boots on the ground.
Yeah. Yep.
Boots on the ground.
Yep.
Yeah.
Yep.
We've had Ryan coming on for years. He's done a great job for us for years.
What do you do at 270 Triple D in Burlington? 270.15, your pre-market high. Whew. I mean, I can't buy it there, but if you do get through 270, man, I'm going to give 274 like a 5-star because going back to earlier in February, you had 1, 2, 3, 4 highs between 272 and 275.15. I don't know. That looks like a sell zone to me. Also, you got your 50-day moving average in there, but that's just me. What do you got? Ooh, Christian with the Christian chart. What are you seeing on Burlington?
Yeah, what do you got
the
for us?
Chat is saying that they can't see your chart, so I just showed mine. I don't know if you guys can see those.
Oh,
now.
I didn't add it. Yep, because I wanted to hear the joke.
Charts.
Well, yeah, now
I didn't have mine up because of your joke.
No, I saw them the whole time. I don't know why they're not seeing them on this side. They're still not seeing them.
They still can't see them, so I don't know.
Why?
I don't know what's going on.
They can see Christians.
No, you can't see it.
No, it's not showing up on the feed, but it's showing up. There they are. Now they are.
Huh.
I don't know why, because it was showing up on like we could see it, and then it wasn't.
Now they could see it. Something you just did, Joel, worked.
You know what? StreamYard updated this stuff, and this is a really bad day not to update. They do these updates, and they think that people are just supposed to like automatically understand the updates. I don't like
should
that.
be able to
that
see
new
Joel's
layout works like that. I think it does. We're just trying to see. No, Joel, for whatever reason, your charts are not showing up, but Christians are. Okay, we'll go with Christians then. We're going to keep Christian's charts up. I don't know. I see your charts clearly, Joel, and StreamYard, but we are not seeing them.
How about now?
Weird. Yeah, we see them. We see them with Christian, but we're not seeing them with yours. It's so weird.
All right, we'll go with Christian's charts then.
Yeah, stay with Christian. Christian, you're controlling the charts here today. I have no idea why the Joel's charts aren't working because it's weird. But anyway, what I would do it, bro, I cannot chase a stock up 13%. I know Okta had the give and go, or gap and go. Actually, they're not seeing your charts now either. The StreamYard is messed right up, man. It's not on us. It's the StreamYard.
Let me try.
Keep that layout like that, maybe. That layout's working. The side layout's not working on StreamYard. So we're going back and forth. Keep the layout that you just had, where we're on the bottom. And yeah, we're on the bottom, and the charts are on the top. So, because for whatever reason, it's not working. Weird, man. Okay, sorry about that. We'll work through the bugs with StreamYard here. Brandster, where are you when we need you? Macy's reported as well. Macy's, which has been the dog of all dogs. Oh, the real estate's worth $28 a share. How could it go wrong by $25? It's a no-brainer. Yeah. You just lost half your money. That's how much that real estate's worth. 5.7% dividend. Well, that sucks too. Macy's, man, the stock is just a disaster. It has been a disaster for the better part of a decade. So I don't see any hope really, like you could buy it, turnaround story. I tried the Coles, that didn't work out. I mean, it's just these stocks suck.
We got just a preview. We don't have any major economics coming out here in 30 seconds. We do have the weekly initial jobless claims. They're looking for 233. You got things like trade balance, wholesale numbers too. But the reminder, tomorrow we get the monthly jobs report. So we'll see what this number is once we should be coming out right in a second. 221 initial jobless claims versus 233. So that's a little bit lower than consensus. Don't see a big move because it is just a weekly number. Canada, January trade surplus with U.S. widens to record $14 billion. There you go, Dennis. A little bit of Canadian data for you. I'm just going to throw this in the chat. U.S. Jan trade deficit widens to record 131 billion versus 128. Oh boy, get ready for some tariffs.
Bouncing around a little bit here. The big number, obviously, tomorrow when we get the February jobs data. The initial jobless claims slightly light. So like Christian says, we're chopping around a bit, but kind of a nothing burger here so far. Tomorrow's jobs data could be a different story. So keep that in mind. Back to the earnings parade here for a second, just before the guest. There is a couple other ones that we covered. MongoDB. We got most of the ones that we wanted to cover. Maybe we did get most of them. Kroger's down. Just going through them quickly. Cracker Barrel's up a little bit there. I guess people are still like their Cracker Barrel. CNQ reported as well. I don't see much from earnings. I think we can move on from earnings. What do you guys think?
Yeah.
All right. Well, I see Jim lurking in the background
Bring
here.
him in.
Yep, he's ready. So let's see if we can get this right. Jim Tassoni, CIO of Armor Wealth Strategies, our Thursday guest here participating in the markets. Jim, do you have the Big Ten title locked up now?
You guys made it a little bit easier on us last night. I gave Tom a call and I said, maybe we'll mail it in for tonight's game just to make Sunday a little bit more interesting, since you guys couldn't hold up your end of the bargain last night. But it's looking pretty good at this point. But the big crown comes about 30 days from now. So that's the one we're looking at.
Okay, so let's talk. A lot of investors are having a rough year. And I don't want to put the hexamona on you, okay? But you kind of had some macro thoughts at the beginning of the year, and you said, you know what, individual equities are tough. I'm going to go to ETFs. All right, you have a macro theme, and you put that macro theme to work. And tell us how it's working and how you took advantage of things.
Yeah, I mean, overall, it's kind of played out the way that we had hoped, or at least our thesis had pointed us towards. Towards the end of last year, I started finding it more difficult to trade for my time frame anyway, in that 1 to 3 month window. Those are my typical holds, at least when the trade's working well for me. Found it more difficult to take advantage of those in the individual stocks. Started to see that there was a lot of macro trends that were driving a lot of the moves. And you guys talked about it earlier, whether it be international, Europe, things like that. And I wanted to be able to take advantage of those. It's very difficult sometimes to trade in and out of those individual stocks. So I started to move more towards ETFs in that space. I wanted to get more defensive in the US. So we tended to gravitate towards more defensive sectors. And I think our biggest benefit to our portfolio is we started to get really positive on the commodities space too. So we liked copper, we liked natural gas, for various fundamental and technical reasons, and those have done really well too. So we're having a pretty good year. Nobody's perfect, but the funny part is now where we're at these levels with the sell-offs we've seen in the technology sector and some of the more beat up international areas, we're actually looking, and maybe we are going to put the hex on ourselves by trying to get too cute here, but we're actually looking to maybe establish some positions in some of these more beaten up areas that we think may be able to find a base here and might give us some upside in the coming month or two.
Are you thinking beaten up tech names? Are you thinking beaten up value names, which there's the value's been really well? Like, where are you looking?
Yeah, so I mean, one particular, again, sector ETF, we're looking at the XLK right here. I'll tell you, and I said it to Joel when I sent him some thoughts for yesterday. We're thinking we're probably going to establish a trade in this today. I like this 217 level on XLK, but it's going to have a very short leash because I'm not going to let this trade get away from me. I'd like to establish right around 217, but if we see a daily close below that, 217 is kind of my line in the sand. If we can't hold that on a daily close, I would get out and look and take my wounds on that trade and maybe look to establish at a different point. But that's one trade that I think is right at a level where we think it makes sense from a risk reward to take a shot here.
What attracts you in terms of the stocks that are in XLK in tech? Is it Apple? Is it Microsoft? Google? Well, Google's not in there anymore, but because that's an XLC.
Right. Yeah. No, I think it's more just the fact that, this has been a significant underperformer versus the rest of the markets. And we're starting to see, at least from the way we look at things, our charts, our indicators, that we're in a bit of an oversold position here in XLK, especially with, we've had this move essentially, from February 20th. I'm looking at this from like 240 down to 217 in like a 2-week period. We just think that might be a little bit overdone here. And we're really playing it more for a bounce than anything. We think there could be a bounce here after that kind of significant sell-off in a short period.
And again, maybe that's the play, is just playing these bounces. Like I've been tweeting and, up a storm here from a trading perspective. When the market's dipping, I'm buying stocks. When the market's ripping, I'm selling the stocks. And it's just worked. Just having the guts and saying, hey, we're down 100 handles. Probably going to maybe have some relief pop when we do. And then you sell into that and you buy down, you sell up. Trading account's doing really well.
Yeah.
The long-term investing account isn't doing that great because it's full of U.S. stocks and it's leaking lower and it's full of tech stocks too. So, I mean, XLK is, you're coming in here. And are you thinking like if this goes under 214 though, you might cut it loose? Like where would your stop be on this?
Oh no, like I said, my stop a daily close below 217. I mean, I don't usually set intraday stops. I don't take a big enough position.
This is a short-term trade.
Yeah, exactly. So this is literally like buy for a bounce. And Christian talks about this, and you talk about this too, Dennis. I want to see, this is a trade because I'm going against momentum right now. This is a trade I want to see work fairly quickly. If we can't bounce, or even, if we undercut 217 on the open and then rally back above, that might be an even better way to enter this trade. But if we can't hold 217 on a daily close, I'll take my lick and move on. But I think there's a bounce opportunity here.
Yeah, I see what you're looking at too. Like again, maybe tech got sold at bounce yesterday. Maybe we're retesting those lows. And video 113. Christian, you were going to say something.
I was just going to say we have a pretty big report after the close today in the semi space, which I think this name is
AVGO.
Yeah, this name, I'm just looking to see what the weight is. I think somebody put it in the chat, which I thank you for that. I think Broadcom is believe it or not, is the 4th biggest weight in XLK at 5%. So that could that could be a driver of your bounce if they come out with a good report. And what do you guys think that they set this bar set a little bit lower after Marvell today?
Maybe. And it is down on Marvell as well. AVGO's trading down $8. They didn't even say anything. Obviously, it's all off Marvell. So I think the bar is a little bit lower here. But again, we've seen situations, in this market where the bar is lower and, they just kind of, have a hiccup there, because really when you give a perspective, longer term perspective, I mean, AVGO was $100 a year ago. It's 180. So we've had, we still got a lot of people in this trade. So hard to say.
Jim, a big theme of this show has been, looking overseas, looking at different markets, looking at Europe, looking at Germany. There's been correlation for many years. U.S. stocks up, they're down, but that seemed to reverse, whether it's a short-term trend or a long-term trend. But you're poking around at a country that we haven't mentioned yet, and looking at a potential investment based really on a commodity. Tell us where you're looking at overseas.
Yeah, I mean, we to be fair, we've been long for a couple weeks now, Europe and China, which has worked out well, like you guys alluded to earlier. But in that continual theme of trying to find opportunities, maybe outside of the Mag 7 and the big S&P names, we actually initiated a position in the Australian ETF, EWA. And again, we think that there's some upside if you look at, and this is a bit of a longer term thesis, but if you look at commodities in general and commodity prices, they tend to move in these rather long term cycles. And when they get really oversold on a longer term frame in relation to equities, it tends to be a really good time to buy them for a bit of a longer term trade. We've seen a pop in some of these copper, so on and so forth, but we think that Australia might be a way to play the continued increase in commodity prices in things like that. So we like the level here. Again, like anything, and this is what I always point out, know where your out is on a trade like this. And for us in Australia, a close below 23.70 on the daily would make us reevaluate this trade and more than likely exit this trade. But as long as it holds above 23.70, we think that this trade is another one that's, sold off in recent days, since last week or the week before. But again, we think that there's upside opportunity over the next few months in this trade.
Well, you mentioned, Jim, copper, and I was showing that chart here of copper futures, which is a bit surprising. And these things here's copper right here. And this is a weekly chart just to kind of give you a bigger picture of the perspective here. But, copper is breaking higher, and usually that's good for emerging markets.
Yeah.
And if China's doing well, which, we've had an up move in China, then usually Australia kind of moves too in relation to the sorry, let me just get the right chart up here, but it usually moves well into if there is stimulus and so forth, then Australia usually benefits. Is that where your head's at?
Yeah, that's exactly it. And also, I think the other play, and we sort of started to talk about it last week, is the idea that we're in the camp of a weaker dollar too. And I think if we continue to see weakness in the US dollar, I think it benefits the markets. Like you said, it benefits commodities, commodity producing nations like Australia, and also your call on emerging markets, I think could also be a beneficiary of a weaker dollar. We like, when you talk about China and some of these markets too, I mean, a market like China, and this is no guarantee by any means, but with the U.S. getting stricter on some of their trade relationships and potentially severing some of those relationships, China may have an opportunity here to step in and become a more significant trading partner with some of these nations that the U.S. has for a long time enjoyed that primary trading relationship with. And I think China is looking to become more technologically independent, become less reliant on the US because of geopolitical events. I still think there's a tailwind there for China for a number of these fronts. And I think, like you said, Australia could get dragged up as a result.
What a great point you're making, and I didn't even consider that the harm that the U.S. is doing in international relationships here is actually a benefit to China. I never considered thinking that, hey,
yeah.
you want to do trade, you want to do trade with us, we'll trade more with China, and stuff comes cheaper over there anyway. So there's a lot of fundamental reasons behind this recent China rally. We worry, oh, the U.S. tariffs are going to come at China here. That's been a worry. But I mean, if international trade picks up the slack for China, there could be a net benefit here for them.
Mm-hmm. Yeah,
So
absolutely.
you think this China trade is real? Would you still be buying pullbacks in the FXI in stocks like Alibaba?
Yeah, you guys talked about JD, Alibaba, maybe Baidu, those. Yeah, and the FXI in general, we're holding our long there. We like that position. Obviously, it's been a great trade for us so far, and we continue to think, at this point, there's no reason the charts look great, the fundamentals, story, and thesis that we have some belief in continues to hold intact. So for now, despite it being definitely more on the overbought side of things, if you just, if you look at certain indicators, I like the trade for my time frame.
We know that things can get overbought and more overbought and more overbought, and they can get oversold, 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 oversold too as well. So the man that got bearish bonds in the TLT at some point last year and had a pretty nice trade, maybe overstayed your welcome a little bit.
Yep.
That's the markets, right? Uh, Now you're thinking a little bit differently about the TLT and the bond market. Obviously, nervousness in the markets initiates a flight to quality, and that you can definitely put that in that category. With you're seeing all the layoffs and everything, and as Blue Putnam talked about on our show, the R word here. As long as these tariffs don't cause rampant inflation, maybe the bonds, maybe the TLT. Talk about your potential setup in the TLT.
Yeah, I mean, we're looking for we definitely missed again, and we may have talked about this last week. I would have loved to be the trader that flipped my short to long here when we when TLT exploded back to the upside. I did get out of the trade a couple weeks ago, but wasn't good enough to capitalize on the long. Did that second initiation of a short, took a little bump on that one. It's always that second trade when you're feeling bulletproof and too smart for your own good that gets you in trouble. But now here, and we talked about the idea of confusion. And, I look at a lot of economic data and a lot of different things that are coming out, and there's so much contradiction. And I don't know what your guys' thoughts are, but, I'm seeing a lot of data that may indicate stagflationary type pressures. And I don't know that I necessarily want to get too bulled up on bonds, especially longer bonds like the TLT in a stagflationary environment. But I also think, if the US economy does go into a recession and growth slows, as some of the indicators are pointing to, maybe that is the safe haven trade to get into. Maybe Christian's right when he talks about, the deflation. I'm still seeing pricing pressures, input costs are going up, margins are being hurt, growth is slowing, but it's a situation where, if I could see the market back down, if I saw TLT back up, I'm looking at my chart here, if it backed up into the 89.50, maybe as low as 89, that might be a place where I might actually get interested in trying a long in TLT.
What do you avoid? You avoiding? Oh, I'm sorry, Christian. Go ahead on this.
Yeah, I was just going to say for the technicals too, that would be a nice check back. I'm looking at around like 89.80. Then that would fill this gap too in TLT, which I think is kind of interesting. So I'm with you on that. Go ahead, Joel.
What are you avoiding?
So, we continue to be avoiding, and Dennis talked about it earlier, and I'll echo this area. These stocks suck, and we are avoiding the majority, if not all, of consumer discretionary. We think that's an area that's really difficult right now. We think the consumer's not in a great spot. We think there's a lot of headwind. Are there probably opportunities to pick through the rubble and find some gems? Yes, but that's an area that we are not in right now. Energy, although we think there's opportunity for energy long term in some of these energy names, we just don't like the price action. So we were long energy. We've exited, that trade. We're on the sidelines with energy names right now, and that's another area that we don't dislike quite as much as consumer discretionary here, but it is an area that we're on the sidelines for.
So another question, I know that you've mentioned gold previously, and by the way, that's a great point. I'm sorry, I'm skipping over your XLY, consumer discretionary, but if that's a thesis, and by the way, we're going to get a very interesting jobs report tomorrow, so that kind of it sets the stage for, are we starting to see some softening, and maybe we're going to start to see that in some of the economic data. The ISM manufacturing services number was mixed, and I think that surprised people that the service data was a little bit higher. But tomorrow jobs report is going to be a doozy, I think, in terms of that the possible R word or the S word, which is the stagflation, should be a really interesting report out tomorrow. Let's just talk about really quickly about gold and silver. Are you seeing this theme continue? We started to see a lot of interesting setups materialize in the gold miners too. I had tried a trade in the gold miner the other day, and I backed out of it because it didn't get off to a good start. But is it just GLD, or are you looking at some of the miners too?
Yeah, we've stayed clear of the miners for. I guess I would say that the main reason being that at the end of the day, the gold miners are still stocks and are still subject to the whims of the economy, good or bad. And so for us, there's different fundamental reasons for owning the metal. Maybe fears around, the US fiscal situation, the central banks around the world buying. We think that there's more of a hedge or safety in buying the actual metal than the miners at this point. So we haven't tried to go short the miners, or we've just been avoiding them as a whole in favor of our thesis around gold and the actual metal.
And what about the poor man's gold, silver, which had a big day yesterday?
Yeah, and I mentioned to Joel, this might go into the category of trying to be too cute with your trading. We thought there was an opportunity, maybe there was silver had a huge move out of from our charts, out of basically since the beginning of the year, January 5th, January 6th, with a little bit of a pullback. There it moved significantly higher, and then around mid-February, late February, it started to sell off, and we thought that the momentum might be dying there. So we tried to short this thing, and right now we are about scratch on that short. We were looking really good for a few days, and then kind of got it jammed back at us yesterday. So we're still holding that short, but if we get a close above $30 in the SLV here, we're going to take that off, because that just, to me, it feels, and sometimes your best trades are the ones that feel the worst, but this feels like we may be fighting a trend here a bit, and sometimes I try to get too cute with things, and this may be one of those.
That happens to everybody. Jim Tassoni, CIO of Armor Wealth Strategies, trying to navigate this difficult market in 2025. Thanks again, Jim. We'll be dialing you up next Thursday.
Thanks, guys. Have a good one.
Okay. Boy, more false
Legion.
rallies here, Dennis. We get up in the 57.80 handle and just
Yeah.
right back down.
I mean, it's a tough market. It's a tough market to be an investor. It's a good market if you're a trader. And if you're struggling with trading, I'm going to say you got to play it both ways. You got to, get out of your head that we're this 10-year bull run, and its stocks go up and I just buy the dip and I make money. That works until it doesn't. It's not working this year so far. I mean, some dip buying is working, but better than the dip buying has been selling the rep. And I'm always of the opinion, I try to trade market neutral. What does that mean? Equal long, equal short. So I'm long a bunch of stocks. I usually short, a bunch of, maybe SPY or Qs against it and vice versa. So I think, trying to just, not be a hero, not saying, I'm just coming in and just going to buy the dip blindly. I think you got to be more tactical here. I think there's strategies, there's relationships to understand. Like this morning, you're seeing certain consumer staples really get beat up. Well, typically on these days, consumer staples have held up okay. So there's opportunities even here early where, maybe you got stocks down a little bit more than they should be. But fade trade continues to work. Blindly fading has been working a lot.
All right, it is 8:55. Let's do some ticker time here. I don't know if anybody's thrown any tickers in there yet, so I don't know if we've jotted them down yet, but Dennis, we're gonna see what we have here to take a look at. 4 tickers here on this Thursday. I did see a couple up here. If you haven't put one in, feel free to do it. I do see the first one here, FCX, and boom, boom, boom. Nice day yesterday. Tough chart here. Let's hold yesterday's gains, bouncing off that 35 low. Not seeing much
Is
here.
there a play here to be long the metals like steel, aluminum? Just saying because next March the 12th is the date where they are supposed to be putting in steel tariffs. So we have seen Nucor coming in down. It's holding up a little bit. U.S. steels come down a little bit. Cleveland Cliff's been an epic disaster, but did hold the 9 support. I think we need to think about that going into next week. Maybe we're a couple days too early, but March the 12th is Wednesday, is it? Wednesday.
Bring in MP, by the way.
Okay. Yeah, that's another one. Materials
It's
trade.
acting really well.
Great day yesterday for it.
And this is rare, like more of your rare earths type play, which I know is being in the news a lot. So that's acting very well. Rare earth specialty metals, and I know that was mentioned in the chat earlier too. It's a nice move there.
They wanted to talk Tesla. A lot of people have wanted to talk Tesla. A lot of people are long Tesla. I have a very small position left. I've been using every rally to just lighten up. I started selling at 410, sold the majority of my position at 385, sold a little bit more on that rally to 350, sold more around 300. I have the smallest of small positions. I think it's up to 5% of what my initial position was. So I'm talking 0.2% of my portfolio or something. Forever playing with the house's money here because it was more than a double for me when I was selling the stock of a 390. It's hard. Like people are saying, going to buy that shares back. Maybe sometime, but I don't know the damage that's been done here. So, we were talking about the European auto numbers, in January, and they were terrible. And we mentioned yesterday, the February numbers are worse. So, I mean, UK was okay. In the UK, they were actually up, but every other country was down significantly here. In Canada, there's a full boycott of it. I mean, I heard a brick got thrown through a window of a Tesla. I don't know if that's true or not, but I mean, people are associating, especially in Canada, Musk with Trump, and they're not a fan here right now. But obviously, not even outside. Internationally, Tesla's going to struggle here for a while. But even domestically, the Dems are pissed off too. So you've got a lot of people not buying Teslas just to make a statement. I don't know how long that lasts. Like, I do believe Tesla's a fantastic company doing a lot of fantastic things, but what I've talked before about is the damage to the brand here is real. I mean, one thing I've gotten right is this Tesla trade. We get a lot of things wrong, but we got very bullish, rode it, up from 190, all the way to 470. Wish I would have sold the high, did not. But, luckily, analyzing it, from I'm like, I don't know the damage being done here, and talking to people, it's like there was damage being done. Gave you lots of chances to get out in January in the 400s. So, that's what I was like, I got to ring the register here, because I believe there's significant damage being done to the brand from the one-sided politics. I'm not saying Republican, Democrat, I'm not saying, either's right. I'm just saying CEOs don't talk politics, because when they do, they cut off half of their buyers. So he's ticked off a lot of people, and those are all potential Tesla buyers. And internationally, he's really ticked off a lot of people. That's the problem. So right now, I'm just sitting on the sidelines here on Tesla. Besides a small little piece that I have.
Yeah, I mean, I'm trying to give you some technicals here. I mean, just from a day trading perspective, I mean, being down 750, 760, I'll call resistance the close. That's going to be a lot of things after the way we declined. 279.10, 279.55. On the downside, I mean, if you can get a couple more lows in the 260 handle, I see the low of the move 61.84 and 67.71. Maybe another one or two lows there. Then maybe you found a true buyer under 270. But too hard to just turn around on a dime, go back up to that 50-day moving average.
Before you move on, I just want, because people are saying, well, I thought you said Tesla's more than a car company. It absolutely is. It's a technology company. But the problem is, I'm not saying about the cars not selling. If you're hurting the brand, that's going to hurt potential buyers for anything else that they're making there too. So it's the brand that I'm worried about here. It's the name. They've never had to do any marketing because everybody loves the Tesla brand. It's always been known as fantastic cars and make fantastic products. Right now, the brand is being tarnished by the one-sided politics. That's the hard truth, folks. We've been saying it before anyone was saying. They're saying it on CNBC now, but we were saying it 2 months ago. So this is the truth. So even if you think they're going to have this humanoid army, well, if nobody wants to buy a Tesla humanoid because they don't like Musk, that's a problem too. So that's why it's difficult to just come in here and say, yeah, this is it. I think there's eventually a story here again. I don't know how long it's going to take people to forgive Musk. And right now, we're not even at the giving stage. They're in the full-on hate stage. So we need to, I think, cool our engines with the Tesla bull thesis for a while.
If I could just chime in here with Tesla too, I'm watching support level of 257.70. That's a big support level for me. And I actually, if you're a long-term investor, I think the sentiment is really washed out. One thing too to kind of remember with Mr. Musk, how long did he say that he's going to be a part of this Doge? Does anybody remember how long he was going to take time away from all his other projects and be concentrated on Doge? Anybody remember?
No.
4 months. So he mentioned 4 months is probably the time that he's going to be on this project, and then let's see if he moves on. But if you want if you're looking for an entry point on some pretty bearish sentiment, I don't know if it gets Musk if it gets much worse right now for Tesla with the sentiment. And you got support coming here at 257. I would be a buyer there for long term.
So take a shot, and you can. And you know what? There's a cool story here, and I'm going to continue to say it. And people say, oh, this is just, I get people going at me, Dennis, this hard leftist, that is just hardcore. I voted conservative every year of my life. I'm not a hard leftist, folks. All I'm saying is I'm an investor in Tesla, and I have to be aware that the brand is being tarnished here. That is all. So, I mean, people are saying, Dennis, oh yeah, Canada, who gives a shit? Canada's not a real country anyways. You can't say stuff like that if you're a CEO. You cannot cut off buyers. Sorry, folks. It's not about politics for my own political views, which, I just stated publicly. I'm conservative. So, I mean, it's not about that. It's about, analyzing stocks and making money with stocks. That's what we do here on the show. And I think for a while here, I think the Tesla brand is tarnished. Is it dead? No, the story's not dead. Is there going to be an opportunity to buy a stock again? Absolutely. Maybe it's going to be Christian's 250. Maybe it's going to come back in. I'm not going to be the hero trade and try to call a bottom when I see the sales falling off a cliff in Europe, though. So I'm just sitting out, sidelines, easier money to make somewhere.
Okay, so tomorrow, we have the jobs number, right? And we'll probably have another 70, 80, 100-point range in the S&Ps to talk about. But do you guys remember we had Michelle Krebs on for a long time from Cox Automotive? discussing the U.S. autos. I don't think she's ever been on with you, Christian. Well, she's retired, but we got a new guest coming on tomorrow that is taking her role over at Cox Automotive. Her name is Erin Keating, and I'm going to have her join us at 8:45, and she's going to talk about what else? The tariffs and its effects on the U.S. auto companies. So, wrapping things up today, folks, on our pre-market prep. Thanks for joining us. Everyone have a safe day out there. We'll be back with you tomorrow morning.